Hi, welcome back to the Leadership Help Desk, where we're just trying to make some money today through passive income using dividend stocks. I did 3 videos last week on passive income through dividend stocks using the example of Ford. I'm not suggesting to go buy Ford, but I got some comments and met a few people, and I thought it'd be a good time to show you exactly what is in my portfolio for dividend stocks. Now, I need to explain up front that I have a mutual fund that is loaded with growth stocks. They have the FANG, the Facebook, the Apple, Amazon, Netflix. They have all of that, Google. And this is simply a small fund that I started with $25,000, and I spent 2 years because I live in another country, and that gets difficult. So I spent about 2 years planning out my dividend portfolio, and at that time, this was in August of 2015, oil was sinking, and I saw that the oil stocks were paying pretty big dividends, and oil's not going anywhere, in my opinion, anytime soon. So I decided to have a significant amount of my $25,000 to go into oil and energy stocks. And I also wanted to be diversified. I didn't want it to all be oil. I had to go look at the telecoms, electricity, cigarettes of all things, REITs. Everybody says go with the REITs. I had to have a technology stock, and I just felt guilty if I didn't put in Apple. And really, when I was thinking of just $1,000, I have to split $25,000 up amongst all these stocks. So it's kind of like 1,000, 1,500, maybe 2,000 of each one. And I bought the Apple really when I was thinking of my kids. That'd be a great stock. So let's go over this, and we have big problems. In the video with Ford, the payout ratio, which we'll get into in a little while, was like 400%, and that's crazy off the charts. Bad, bad, bad. And then I looked it up again today using the NASDAQ website and searching, say, F stock dividend, and the NASDAQ will pop up, and then you look at dividend history, and all of these figures pop up for once you put in each individual stock. And I saw that the payout ratio of 350 for Ford, which was a big difference. And I'm going, this is impossible. This is just crazy. And anyway, we'll look into that in a second. So anyway, I've got AT&T with a yield of 5.6%, Verizon with a yield of 4.3%, Southern Company, the yield currently, if you buy these today, these are the yields you're going to get. I had different yields because I bought in August of 2015. So we have Philip Morris at 5.42, Altria. Now I can't say it. 7.97. I just bought some more of that. We have the REITs, WPC at 479. At 349. Ford at a dangerous 8.32. It's a little too high. And then we have the Apple, which was not really considered a dividend stock. They're still growing. They have a ton of cash on hand, but right now, after the stock has gone up so much, the dividend is only at basically 1%. And then I have I think this is a mining company, BBL, and it pays 7.88, and it varies because they pay twice a year, but then sometimes they pay 3 times. So I guess it's however much cash they have. And then here is what's left over from the oil stock. We have Chevron at 5, Royal Dutch Shell at 8, BP at 7, OKE at 5, and KMI, which is a crazy one. Crazy. It's just weird. It was the best stock, and even Jim Cramer said, stop trading that stock. It's horrible. At 4.87. Now, you might not be able to see this right here, but I also, with my dividends, have gone and bought JD stock, which is Alibaba's little brother, so to speak, and I bought some Snap for like $10 a share, just playing around. So, as you can see, here are the yields, and if I was to put an equal amount into each one of these shares today, I would have had an equally weighted. I put say 1,000 in each share. I would have a total dividend return of 5.56%, which I think is pretty healthy. Now, look at our payout ratios. Our payout ratios are the dividend per share divided by the earnings per share. So this tells you that how much this payout is in comparison to earnings per share. So we want a nice healthy payout level like this that shows that the company is healthy, they have plenty of cash, all the cash isn't going to dividends. There's plenty of room for increases in the dividend, and it looks good. These NAs, non-applicable, I believe it is due to they're all foreign. So that's a weird place to put non-applicable. So here with our REITs, the payout ratios are higher, forward, off the charts, and I'm investigating that, and hold with me because I'm going to explain that in a second. Apple at a 21%, and the oil, Chevron, surprisingly, at 61%, and the other ones are relatively low. Now, here again, all of these numbers came from NASDAQ, the NASDAQ channel. But then I said, so I was preparing for this video, and I looked up AT&T payout ratio, and I saw an 18.54%. And I said, Maurice, that doesn't look right. And you know what? Now I'm starting to question Ford at 348, because that means they can't afford to pay that dividend all the time. And so I looked it up. I went to a different website. I went to Dividend.com and saw their version of what. See, we got work to do. We got this payout ratio. We can't. Do we trust these numbers? That's a good point. I went and looked at AT&T and then saw Dividend.com, their version, and it said last year the payout ratio would have been 58%. This year it should be 57% payout, which sounds more like AT&T that has a lot of debt and things like that. Next year it could drop down to 54%, and if you compare it to cash flow, then it goes down to 24%. So then I'm going to say, wow, is this real? Is it real? So I looked for the dividend per share. They pay 52 cents every quarter, which is 4.08 cents, $2.08 a year. And their earnings per share, according to them, was $3.61 earning per share, which gives us a payout ratio of 57.6%. That sounds about right. Now, So that's it. These are my main stocks. I've been adding AT&T. I've been adding Altria. Is it Altria? Oh, that's so embarrassing. And then some Ford. I'm not going to get into oil much anytime soon because oil's going down. When I bought the oil, it was going through a crash, and the thought process, I want you guys to think about your thought process when you buy a stock, because there's danger everywhere. At the time I was hearing that, America is oil, they have all the oil they need, and which means that the price should go down. So why am I loading up on oil when I did catch the bottom in August? Now you're thinking, Maurice, this is the best. This is the best looking thing. We got an average of 5.56% average dividend yield on our money. We do have some growth stuff in here. And you go, man, you're a genius. Well, this is what's left over, folks. This is what's left over. I had a REIT that everybody talked about, HCP, and it was, it's the best, top 10 dividend stock and all this stuff. And then I noticed it went down a lot, and I think they even pulled out their dividend. And it showed up in my account. I got 6 shares of QCP, which is the quality, or maybe it's quality health something, I don't know. And then they'd spun off the healthcare part of it or something, and then my and then I read QCP or whatever the hell it is. Just give them some time, they're going to be great. So now you'll have 2 great stocks. Well, it disappeared, and then it turned into Peak, and I'm going, I don't like any of this. There's no consistency here. They've changed, they spin off and they changed the whole name, and I'm going, I'm out of here. So I sold that off. Now, I also bought Seadrill and Rig, Transocean. I thought those were going to be great comebacks, just great. They had paid $1 dividend per share, just huge. And then as the oil was falling, they suspended that, and I go, well, that's cool. I'm going to catch them down, then they're going to add back their dividend. Seadrill did add some dividends, here and there, but it was going bad. So every time these stocks paid, I just bought some more Seadrill at like $8, $6, $4, and then they suspended, and I was thinking that I heard somebody talk about SDLP, which is another Seadrill stock, and I go, oh, I'm in the wrong Seadrill stock. So I started buying that. I don't know how much, maybe $4 a share. You're going to fall into this. If you're new to this, you're going to get paid by AT&T, $60. You got $60 in your account, right? You go, I'll just go get 10 shares of that. It'll be fun. Well, it's all gone. It's all gone. And Rig would go up to 12 and pull down to 5. I finally sold it at 6. I had 100 shares, and that is actually what funded my Ford purchase and my Altria. And then there was Brett Burn, and which is oil something, and ARP, which I believe was Atlas Resource Partners, which were into natural gas, and they just disappeared, just fell off the charts. So I lost a lot on that. So my point for this video is that we all need to go check on the payouts ratios and see what's actually going on. This could be a really bad number. And I didn't trust these numbers, but I just went and looked up one, and got a different story. Another thing is, now that trading is free, don't necessarily be lured into spending your $100 that you get on poor quality stocks that have really high yields, or they had high yields and you're hoping they're going to come back. Because I lost a lot on that. I lost a lot. And then this is what I ended up with. So in the next video, maybe next week, I'll put up a video on how many shares I have and when they pay, and how to put that on an Excel sheet where we can get the total for our monthly pay for the whole thing, and maybe you guys will find that interesting. So there we go. That is my portfolio at the moment. What am I worried about? No. We would think that smoking would be gone by now, but apparently it's not. Maybe. I might want to get rid of this. Oh, it pays monthly. I only have like 5 shares. I want to add to Ford, even though it's risky. That's just how it goes. I can't afford Apple. I wish I didn't have this KMI, Kinder Morgan. I wish I did not have that, but I do. So that's it. That's what I think a pretty good portfolio looks like. And here again, I spent 2 years. I had money in the bank waiting, and I spent 2 years and tried to diversify, and that's what I came up with, minus some trash. So anyway, hope you enjoyed it, and I'll try to stick up another video on the portfolio and how much they pay and when they pay. So enjoy your day.